Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I am your host, Landy, and today is March 25th, 2026, and we're looking at Bitcoin to start today. And as I noted on Monday, we did see a higher low put in on the daily here. I don't have the bands on right now. I will turn them on in just a moment, but I also noted, I've been noting for a couple weeks now to watch WTI, crude oil, and Dixie, as well as if you would like to see where things are going in relation to the bond markets, you should also check those out as well in conjunction with taking a look at oil, not just here in the United States, if that's the only one you've been keeping an eye on. Also keep an eye on oil overseas as well. So that would be Brent and Gulf oil and bonds. So you can kind of gauge where money is moving. We're gonna take a look, at Bitcoin to start today. Then we're gonna go look at oil, Dixie. We'll see. We'll touch on bonds for just a moment. At least looking at where they ended the day. Then we'll look at the rest of the commodities, and we will look at traditional markets. So to start with, Bitcoin has put in that higher low. It has reclaimed and held, more importantly, the range highs here, the smaller range highs of the narrow range of the downtrend. So when looking at this particular structure that we have going on here, uptrend is pretty clear. And it's also very obvious where it would break down on the lows at 67,332 here if we did see a close. And that is something to be aware of. So even if we do get Bitcoin pushing back above 72.2 here, I would look for a run between 72 and 74, bottom side of the overhead resistance, that original wick high here outside of the range, to around 74 to 76. If it does reclaim and break above 76, that's where we can entertain trips to 70 to 80. Now, if we do see Bitcoin break back down towards 68 to 69K, be aware of the low at that 67,332. Anywhere below there, I'm looking for a run right to the bottom side of this range here, somewhere around 65K to 66K, somewhere around there, where the close open is of this higher low. And then anywhere below 65, I would look for a move down to the $62,500, $63,000 range lows here. And that is where the daily close open is of the current low that was set with the swing at 60K. Anywhere below 62.5, I'd be looking for expansion into the actual lows here between 58 and 60K. And if that were to be dropped, yes, it can swing down, but mid 50s to low 50s is kind of where I'd be looking, 55 to 56K fair game. All the way down to 52.5. Anywhere below there, I'd be looking 48 to 50, which is a much wider range. If it started to break below 48, that's where we have to look to mid to low 40s, and potentially upper 30s to lower 40s, being 38, where there is a monthly at 38.5 to around 42. But while it's still in an uptrending structure, got to give it a chance. Beware of lower highs. If we do see a lower high set on the daily, it's something to watch out for. Of course, we'll be looking right back to this low. Excuse me. Let's go ahead and take a look at the Bollinger Band set here. Pretty clear that if we do start to break back into the range highs here, we need to see a close above around that 74, 74.5 region. Right around where the last monthly higher low was at 74.4. And that is where the daily upper second standard deviation is. That would be expansion into the high side structure here by the upper third around that 76K region. Anywhere above there, I would be looking for expansion into overhead resistance right around that 78, where the 100 period exponential is to that 80,000. 80, you can call it 81. There is a little bit of variance when looking at perp dexes and centralized exchanges contracts. So that would be your perpetual futures contracts, or your perpetuals and your futures contracts have a little bit of variance there. So 78 to 80 is kind of what I'm saying, but realistically, you can see a swing up towards, 81. If we start to see a close above $80,500, $80,000 or so, that's where we can start to look mid to low 80s, 83 to 86 being fair game, up by the 200 period exponential moving average, also the bottom side of the range, and right where we saw the last low come in before the lower high that broke down to those lows and made new lower lows. And then obviously broke down to the levels that we are currently at now. So something to be aware of is that we do have a neutral RSI and we do have a stochastic momentum indicator indicating that if we close here or higher on the daily for today's candle, now it is Wednesday for me, but the Thursday candle is open. And in this case, we could see on closes here or higher a shift in the stochastic momentum indicator. Now, that would be right around the edge of the bearish control zone here. It's not exactly a strong signal. We still need to see, of course, 72 broken above, closed above, and then, of course, moving on to test that 74 to 76, and, of course, get closes above there to go and test 78 to 80 if it didn't already try to swing for it. Now, the big thing to watch, as I've been mentioning over and over and over again, with the upside and downside ranges as it relates to Bitcoin, is to watch oil. So, oil broke down. It hit our downside target. I noted this on Monday. I was looking mid to low 80s, somewhere around, 80, that 83.28 that's on the chart here to 85, anywhere below 83.28, look to 70 to 80, and then the mid to low 70s from there. Obviously, if 74 to 75 breaks, I would say 75 to 76 actually, where the red line is. That is now where the 55 period exponential moving average is. Anywhere below there, I would be looking for the lower 70 region, 68 to 72. Maybe even, front run at 73, but that would be fair game. That would also be a structure break. This is a consolidation with a lower high, but a higher high close open structure up here. And it's still holding higher lows. Now, if we do see closes back above 93.5 and especially above 95, that would be another higher low. And I would be looking up to around 98 to 102, top side of the highs up here. Anywhere above there, 105 to 110 is fair game. And then above there, 115 to the highs at 120, and even roping in 130 up here, which is a major area of overhead resistance on the monthly, quarterly, and weekly time frames. So be aware of that. Again, if we start to see the mid to low 80s, 80 to 83 breakdown, I would look right down to, I would say 74 to 76 at this low. And if that starts to get broken down below, we can entertain trips to 68 to 72, which would be more towards the support down here, this macro support area of interest for oil. Now, I'm going to jump right over to Dixie. As you can see that as we saw in yesterday's, well, it's still Wednesday for me, but in Wednesday's price action, I should say, we saw a move off of the 200 exponential moving average. We also had the basis cross over that. It's actually a bit of a bullish sign. Doesn't mean that it's going to hold, but a little bit of a downtrending structure here on the daily. But if oil holds up and starts recovering, especially above 93 to set the low, but more importantly 95, that overhead resistance zone, then I would be looking for Dixie to also move back in towards, about $100 to that $100.40 region. And it's barely set that low. Now, this would be a closing lower low in this case, because we had a closing higher low up at the highs before getting rejected. This was a closing higher low right here in this structure. So it was basically a closing high to a closing higher low, all within the same candle structure, led to a rejection at the 377, then moved back to the 200. And that's actually what we need to watch. So if we get any moves below that target that we were looking at, 99, which got hit pretty much right on the dot at 98.88. I would start to look towards 98.50, anywhere below 98 bucks. That's where we would have to look at, the 50, right? To the lower second where 98 bucks even is coming in. That's where we would look for expansion back to, that's a support area. If it was lost, we'd look expansion back to around 97.60 to 97.35. Anywhere below there, looking down to around 97 even. Again, right back to a macro area of interest. So keep a close eye on it. When you see dollar strength, typically you're going to see markets get those downside moves. Bitcoin playing quite well in this environment, which is good to see. Now let's jump back to commodities real quick. Let's go ahead and look at natural gas. You're probably going to see some natural gas deals pretty soon. I mentioned this on Monday and a little bit last week on some Spaces events on X, but keep an eye on Europe, because I have the feeling that Europe is going to start doing. There's been some talk of some deals for LNG possibly coming through to the United States, considering what's going on in the Strait of Hormuz and what just happened at South Pars. So I would be really paying attention to this. Why? Because we're near the tail end of winter, and if there is any kind of cold periods with increased export demand, if there are some more deals that are done, there already are some from Asian countries that are in the finalization stages or have been initiated already. I don't know if they've been already begun to be shipped, but if there is a cold snap of some sort, I would be looking for this to move up and hold these lows that it's currently at. So that's where, I would be looking for a break back to the highs around the three, above $3, right? I'd be looking for a break back to the highs around 325 to 330, and then potentially a move to around the 350, 360 range up here. So just pay close attention to that. And yeah, the timing might be getting there for that. And likely we'll see this setup start to play on the chart with a low being set, which has not been set yet. We would see a low set somewhere around where the open was today, around $3, and then start looking towards that 325, 330, and then up to the 350, 360 range. If that does happen. That we would also get a Stoke turn and some bullish divergence, if I'm not mistaken. Yeah, ever so slight bullish divergence, but that would explain some of what's going on. If we start seeing that in the charts, you probably start reading something about some deals being done in the headlines. Gold has hit one of our major downside targets. That being the low here around the 4K to 4100 level, with 41 coming in even there. Nice close back above 44, working its way towards 45. We did get that swing above to 46. If we do see that broken above, especially around the 46.50 region, I would be looking for big moves back up towards 48 or somewhere around there. And then we can start entertaining 5K anywhere above there. But beware of lower highs that come in on swings that fail to close above around the 46, 46.50 region. Then we have to entertain moves back down to 44, potentially 42.75 down here, and then back to the 4K region, 4100 to 4K region. For silver, we hit the 200. We were looking for that, 60 to 65. We got, what was this? This spike low at 61. So good. Last lower high is all the way at 90. I would expect another lower high, but if we do see 75 break, I would look towards 78 to 80 per ounce. Anywhere above there, look to 85 to that 90 region for a possible attempt to break that lower high. I would be looking for subsequent lower highs, though, to be quite honest. But just pay close attention. If we see the lower high get broken at 90, then we're probably going to be looking for some higher low support to come in. As it stands right now, if it fails to pass, $75 or so, looking right back to that 60 region, potentially down into 58 to 60, where the 200 simple is. This is an expansive move down. Anywhere below there, I'm looking towards, 48 to $50 down here by the 377 and the one spot, which was the prior highs. And let's see, let's go ahead and check on, bonds real quick. So we did have a little bit of a sell-off in bonds, so interest rates rising. And that's as it currently stands, though. Let's look at the 2-year. Yeah, yesterday, a little bit of a seller's market up here. Let's look at the 10. We did get a little bit of a buyback on the 10 yesterday. On the longer end, I think on the 30 as well. Yeah, so shorter end, kind of a little bit of an exit. And then on the longer end, a little bit of a buyback. Now, it runs opposite, essentially. When you see yields rising, it's selling pressure. When you see yields falling, it's buying pressure. So pay attention to it as it relates to Dixie, especially if Dixie starts to fall aggressively. And we see yield spiking, Dixie falling aggressively, oil falling aggressively. That's money moving out. So let's go ahead and take a look at traditional markets. Traditional markets holding up at that weekly still. For Dow, it's very, very simple. Needs to break as it stands right now. It's rejecting at the 200 EMA and SMA, where they are kind of overlapping each other and getting ready to see the SMA potentially cross over the EMA. What does this mean? Well, not good things typically, but I would be looking for downside anywhere below the 45.5 to swing the low and come in somewhere around the 45, upper 44s to 45, where the lower second is. So upper 44s being around 44.8, can get a swing below there into the mid 44s, but I'd be looking for closes to kind of try to hang around the 44.8 level. And we need to see for any kind of progress to be made to turn things around at this major weekly level between 45 and 46,250 or so. I'd be looking for any break above 47, 430 or so to break the downtrend, and then we would need to see a retest either higher or back into this weekly area as support, and then we can start looking towards the 48 to 48 and a half up here by the upper first and the 50 simple. Same kind of look, a little bit more aggressive in terms of the positioning of the moving averages here, with the 200 exponential being under the simple already, but major weekly tagged, upper 23s to now 23 and a half, kind of the downside area of interest. And we would need to see, in this case, a lower high here of 24 and a half beat to break the downtrend on a close. Needs to be a close. And this goes for everything that I'm talking about. Needs to be a close. Can't just swing above. And then anywhere above there, I'd be looking for it to try to work its way out above the 24 and a half, 24.6 level towards 24.8 to 25K, where this last lower high is up here. In the 24.8 to 25K level. Anywhere above there, we can look, low 25s, but realistically, we need to see structure being built while this weekly holds, if that were going to be the case. Otherwise, it favors the downside towards, the mid to upper 23s. When looking at SPY sitting on the weekly, same 200s kind of look here for the EMA and the SMA for the dailies. Needs to beat the lower high down here at 662, and then subsequently take and grab onto the 670 region. So 670 would, well, lower high break above 662. Look, 665 to 670 essentially. Breaks above 670, we could start looking back towards the 672 to 675 region. But I wouldn't look for too much more than that, to be quite honest. If it did start to spike towards 680, just be prepared. It's probably going to come back down and try for higher low, equal low structure. And then we, take it from there. Otherwise, it does favor the downside towards the 640 region, where we did get that spike down last Friday to 645. Anywhere below there, and I would start entertaining 640 to 635 down here by the lower third. Any worse than that, and we're starting to look down to the 627 to 630 region. So it's got some work to do. Need to see oil really head to the downside and break below that that $83 to $80 a barrel on WTI. See some weakness show up in Dixie, and then see if we can't get a rally out of some of these areas on the weekly. That would, likely lead to Bitcoin also rallying through to more than likely set that 70 to 80 area if we did see something like that. Otherwise, this is positioned for a sustained downtrend as it stands right now in traditional markets. We need to see that daily trend break for that to change. But yeah, it's looking all right for Bitcoin. I would watch, closes here higher around the 70,500 to 71,500 area for a potential Stoke turn. And then we can start entertaining moves back to the upside on closes, especially if we hadn't already seen it. But on closes above 72, I would start to look towards that 74 to 76 area, and then breakouts above their expansion into the 78 to 80, maybe even a swing at the low 80s, and then any closes there, a more concerted effort to push into that 83 to 86 level. And that's all I got for you today. I hope you like and share this out there. And you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Catch me tomorrow again on David Gokhstein's show, The Breakdown, at 12:15 p.m. Eastern, 9:15 a.m. Pacific Standard Time on X, TikTok, and many other platforms where I'll talk to him about, charts. Sometimes we get into politics. This is the show just for charts. Sometimes you will hear me talk a little bit about the political environment as it relates to the charts. There you'll probably hear a little bit more about my opinion on the actual political environment and geopolitics as well. But we do talk about the charts there. So hope to see you there tomorrow morning for me. Still in the Pacific Standard Time Zone. And if you are on the East Coast at 12:15 p.m. And then I'll be back at you here on Friday for the Friday wrap up, where I will discuss what to look for on the weeklies coming into close for Bitcoin, and we'll kind of take it from there. You have a great morning, afternoon, and evening, as I said before, and stay safe, trade safe. With all of that said, Landy out. Take care.